Hey guys, this is Abir, and in this video we will talk about the crash that we have seen, and we'll talk more about how I am investing, my investing strategy, and what I think is the best strategy to go with. Another thing we'll discuss is the aspects of businesses that you are seeing in the back are now opening. So what does it entails and how does it translate to the economy overall. But mostly this video is focused on the stock market and what change we will be seeing hopefully in coming days, and how should we plan if we are interested in investing in a stock. So let's get started. Before starting this video, I really wanted to thank you guys for watching these videos that I've been making. And if you like these kind of videos, please make sure to leave me a comment so I'll know who is interested in these kinds of videos. And also to support my channel, don't forget to leave a like. So let's get right into this video without wasting any more time. We have seen a drastic drop in stock market recently. This drop we have seen has been over 6% in Dow, and if you talk about S&P, then we have lost about 5%, 5.5%. Same goes for Nasdaq. We have seen around 5% of a drop, and honestly it was being expected for the most part, but as I said, like, I'll be discussing what my strategy is. I honestly don't get scared or don't get greedy if you talk about a stock market with all these little changes in the market. So these fluctuations, we know what happens behind the scenes. So we had a press conference from Jerome and Mr. Fed told us about what's happening and what will be the impact to our economy of this still existing crisis that we are seeing. So after all of that, we have seen a drop in the market, but it goes without saying, if the market is seeing a drop, it's not just because Fed has said something or our president has said something, but it's also global, and the global changes that we see also impact our market. So if you are up early in the morning, or if you sleep late at night, then I would suggest you to keep an eye on the world economics as well, because that also impacts us. So with all that said, we are again seeing some red here, and the top three stocks that I think gonna be always green will be one of the pick will be Amazon.com. In my last video, I focused on the 10 stocks that I've been investing in recently. I have invested in the month of June in this, and honestly, in the short term, I don't see any gains, or I don't see much profit, because it's the market is already hyped, and I agree with some of the bear market analysts, because what they are saying is it's all hyped, and Fed is pumping up money or something like that. But I don't go to that extreme, but I do agree that this market does require correction, and that we are seeing. Like, it's not gonna be a drastic drop, or we might not see a 36% drop again, but this is something that we will be seeing in future coming weeks, if not months. And that's because of the economy. It's not 100% back to its original position. People, over 40 million people are still jobless, and everything of such impact, stays for a little long. So this gains in the market and that we have seen were all part of the stimulus check, I would say. So anyway, this is my first company, so undoubtedly the best company in the market out there. Has no match with any other. If you think that this company will go and see some decrease in the revenue and stuff like that, then I would suggest you to come out of the rock that you are living under. Because we have seen the growth of Amazon. Obviously the price of this stock currently is very high, but if you ask me, this price can easily touch $3,000 by the end of this year. I have no doubt about it. And based on that, honestly, I think the price is not just based on the short term here. If you go here in this short term analysis, it's not about short term, it's not about midterm, which is 6 weeks to 9 months time, but it is a long-term game. So this stock, as you guys can see, it is little overvalued, and analysts do think that it is overvalued. But going back to the basics of a stock market, and when you talk about the investment strategies that Warren Buffett experience and exercise, this is something that we all should understand. And this is very basics, that the company, you are investing in a company, you are buying a company, basically a part of a company basically. So what it means is, it's not about what is the current price, or you think that the fair value would be $2,000 or something like that, but it's what value this company will have in coming 3 to 5 years, or maybe 10 years, or even coming decades. So that's important to understand, because we as an investor are not investing in this company for a short term. We are looking at this company as a long term. So looking at its forward dividend yield, if looking dividend yield, it doesn't have a dividend yield, right? So looking at the PE ratio, it's like it does look crazy for now, since it's more than 100, but it's something that in the long run I think will get better. The total market cap after this huge 3.3% decline is still $1.2 trillion. And then if you see the earnings, the previous earnings, they have missed for quite a bit. The actual earning estimates were something, and then the Amazon missed their earnings quite a bunch of time. It's not just once or twice in a few months or so, but it has been a bumpy ride for Amazon. But if you look at the market and the business that they are into, they are in every single business. I'll probably make a separate video on Amazon, shedding some light on the fact that they have invested in almost every single sector that you can think of. But anyway, if you want to invest in this company, if you are a long-term investor, then this is the share to go. Now let's look at the statistics and the market valuation, market cap, and other fundamental measures of this company. So around $1.3 trillion is its current valuation. And as I said, don't look at the PE ratio, be it trailing or forward PE ratio. Both of them are more than 100, which has not been in the past, which was good sign. And currently it does look like it's overpriced. But if you think about it, and thinking from a perspective looking at the company after 3 to 5 years, I think this company will definitely will be in positives. Then profitability margin is little less, but it's not less because they don't have much profits. It's less because they are expanding all the time. So the one strategy that Jeff Bezos has implemented is whatever gains he has seen, he has basically invested the same in the market back into the business, be it acquisition of other companies, Whole Foods and other companies, or the expansion of its website and the delivery service. So the revenue that it makes basically goes back into the business, and that's why the profitability here seems little less compared to other companies out there. And then lastly, when we talk about the total revenue, it's about $300 billion yearly, and this is the last 12 months, trailing 12 months. TTM stands for, if you are not aware of that. And the cost of revenue is high, gross profit is little less compared to other companies, as I said. But if you look at the debt ratio is very less. Amazon can pay off its debt quite easily, and that's where they keep investing in their business itself, rather than accumulating something to share with their shareholders. So they don't pay dividends, but at the same time they do keep expanding the business, and that is why we have seen some crazy growth in Amazon share. So this was my take on the first company. In the after hours, Amazon has seen some profit close to 1%. So if you have bought at lows, then good for you. You have made 1% profit already. Moving on to the next company. Next company is probably my second favorite or third favorite, I would say. It's Apple. Apple is, we all know, it's a consumer based products. I always say Apple would have seen better growth and expansion if they had their own cloud service like Amazon, Microsoft, Alibaba has. But it is what it is. Apple's business is different. It's completely consumer-based business. They cater a different type of audience, so that's what they are doing. So Apple did see close to 5% drop today from their highs, but then again, a previous close 352 was their 52 weeks high, close to 52 weeks high. So it was little expected. I would say Apple does come with a dividend. It's less than 1%, less than what you're gonna get from your saving accounts most likely, but still it is icing on the top of a growth share. So this is definitely something that you should consider if you're investing in long term. Then again, if you see at the performance, the stock is overvalued, but the performance in short term, mid term, and long term are all ups, which means that Apple is going to see some some gains in if you talk about analysts, they have suggested that Apple's gonna see some gains in short-term, mid-term, as well as the long-term period. And the PE ratio is pretty decent, less than 30%, and earnings per share, $12 is the earnings per share. If you look at the earnings that Apple has posted recently, it has beaten all the expected times, like all the times what analysts has expected it to deliver. It has over delivered that promise, and it has shown some good numbers to its investors, and that's why if you see the earnings per share is a lot, and that is one reason that the price of the Apple stock was going up and up. But another thing you notice here is the revenue in comparison with the earnings. So earnings, basically revenue, earnings is basically a part of revenue, right? So if a company is showing a strong earnings, but the revenue is less, then you should reconsider the company, because revenue is something that keeps the business going. Earnings is obviously the profits that they're gonna make over that revenue. So this is why Apple is thought to be a strong buy right now. And then again, if you go to the market cap, Apple currently sits on close to $1.5 trillion, and that is one thing that it is considered, like people consider Apple's would be the first company to hit $2 trillion, but only the time will tell that. And then we have the income statement. If you see here, a revenue of $267 billion, which is little less than what Amazon has, but revenue per share, if you see here, is a lot more than Amazon. And then balance sheet, obviously total debt is little more than what Amazon has. And cash flow statement, you can always consider. Another good point, as I mentioned earlier as well, that is that it does pay dividends. So depending on what time you buy, it could be ranging from 0.9% to 1% if the stock's price go a little lower. So this is my second company that I think I'll be investing in more in the future. And after hour, you can see here, it has also gained close to 1.5%. So good for you if you have invested in the Apple. And then my number one contender, along with Amazon share, is Microsoft. I know all these three stocks are tech stocks, and this is something that an investor should consider, not buying into one source or one type of companies, but these tech companies are huge. These companies, all three of these companies, worth more than $1.2 trillion each. So that's something to consider. So we have seen over 5% drop today, but again we have seen some gains in the market after hours. Stock is overvalued, which I totally disagree with. I don't agree that it's an overvalued stock, especially if you consider the business that Azure, and Microsoft Cloud is bringing. Also on the side, the Microsoft Office, the company that has been around for so long, with such a big revenue, and it's the model that Office has migrated to has brought so much more revenue than it used to before. The subscription model that Microsoft has implemented with the Office products, as well as the dividends that they are paying out is icing on the top. So over 1% dividend that they pay back. And if you look at the earnings in comparison to Apple or even Amazon, Microsoft is the gold here. Microsoft has beaten all the shares all-time estimates of analysts, and that's why these estimates are keep going up. But Microsoft is still delivering to the promise, and making money for its investors. Market cap again is $1.43 trillion. If you see the trailing or forward P ratio, it's decent. I won't say it's the best, but it's decent considering the size of the company and how much assets that they have currently in their bank. The best part of Microsoft's business is the profitability. If you see the profitability margins here, over 33%, which is crazy, which is the number that is more than Apple and Amazon. And if you go back, let me see if Apple has profitability of 21%, whereas Amazon has profitability of 3%. So both combined cannot beat Microsoft in profitability. So this is something that I think takes Microsoft to my number one stock in the portfolio. And then again, it's a big company with $138 billion in revenue, and quarterly growth is 14%, which is a lot. And gross profit, since the margin is more, so you'll see a big number here as well. And then talking about the balance sheet, everything looks in control, but the debt here is $84 billion, which is a little on the high side, since the revenue is so much. They can still pay it off whenever they want, but to keep everything is in place and keep their investors happy, they're gonna keep this trend going. So if you really think that these three stocks are what you were imagining or what you were thinking of, then don't hesitate and don't forget to hit that like button, and make sure to share this video if you think that this video has added a little value to your day. This is Abir Khan. Thanks for watching, and I hope I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.